Welcome to the daily insights that matter. Now, the PMI for services, which is the Purchasing Managers Index for the services sector, recorded a slight decline to 61.2, which was the second highest print in 13 years, indicating high business sentiment. Now, as you are aware, a reading above 50 denotes expansion, whereas a reading below 50 denotes a contraction in the services activity. Now, let's discuss this today. The PMI for the services sector released by the credit rating agency S&P Global had a slight decline to 61.2 in May from a 62 reading in April. Now, this was the 22nd straight month that it showed a reading of over 50, which implies growth in the services sector. Now, favorable demand conditions, new client orders, and positive market dynamics supported the output for this month. Now, May marked the fourth successive month of a rise in the new export businesses as well. Now, the sector, however, was impacted by high inflationary pressures due to a rise in both input and the output costs. Additionally, India's services sector has been booming, with the most recent reading for April showing a 26% rise over the same time period last year. Now, even though it dropped from 62 in April to 61.2 in May, the PMI data shows the second strongest growth in 13 years and the expansion for the 22nd consecutive month. Now, the number for May shows evidence of persistent demand resilience, robust output growth, and job creation in India's booming service sector. Now, the manufacturing PMI, on the other hand, rose to a 31-month high of 58.7 in the month of May as well. Now, these positive indicators are the most recent additions following India's GDP growth of 6.1% in the fourth quarter of FY23, which was higher than projected. Now, in the past month, airfares on India's busiest routes have experienced a significant rise, with prices skyrocketing upwards to 3 times their usual rates. Now, this sudden surge in airfare costs has caught the attention of travelers and industry experts alike, leading to concerns and discussions about the underlying factors contributing to this price hike. India's busiest routes such as Delhi-Mumbai, Delhi-Bengaluru, and Mumbai-Bengaluru witnessed a constant influx of passengers due to the high demand for air travel between these major cities. Now, spot rates or tickets purchased within 24 hours of flight departure witnessed a significant surge compared to a month ago period. Now, as seen in the chart on your screen, Delhi-Mumbai and Delhi-Pune saw triple-digit increases, indicating an abnormal surge. However, fares for tickets purchased 30 days in advance have seen a small increase between April and June. Now, post the resumption of air travel in May 2020, the Civil Aviation Ministry had capped the number of flights and the fares that they could charge. Now, these caps on the airfare were removed last August. Now, the spot fares on domestic routes throughout the country have been influenced by several factors, including the suspension of Go First flights from the 3rd of May. Now, Indian carriers do not have additional planes to start new flights and cater to the increase in demand. Now, with the onset of summer, there is a rise in leisure travel, which has further affected the spot fares. However, fares for tickets purchased 30 days in advance have seen a very small rise. Additionally, the Civil Aviation Minister expressed concerns over the abnormal surge and proposed airlines to self-monitor the issue. There could be a mechanism implemented for ensuring reasonable pricing within the high RBDs, which is the reservation booking designator, to curb prices on the high demand routes maybe going forward. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com